Restaking is the concept of double mortgage. You are staking your house twice and getting double the liquidity. When you stake, you are saving your ETH on a savings account, and because of that, you're receiving yield and getting a liquid token on top of that. What Eigenlayer does and Genesis is that when you restake the second layer, you stake once, get 4. You go to Eigenlayer, you stake on 2 or 3 validators. This means that you can have 4 plus 4 plus 4, and that can get me 12, 18% yields. Amazing.
This is the headline that gets everyone sitting up in their seats. This can really create wealth.
There is only 10 companies in the world doing what we do.
More reward typically comes more risk. So what's the catch?
We are working on what we think that is a groundbreaking solution. Is we are applying insurance against slashing. We are also developing something that called distributed validator technology. We have clusters of multiple validators that keep your keys private and that go around it and makes it 100% secure.
And that's what the market needs.
Yes.
Customize risk and then customize reward.
Genesis is the only protocol with this at the moment. Every day we are releasing blog posts on how to interact with the technology, to give a wider explanation of what you do, crystal clear, open source, everything is there. Genesis specifically has the possibility of having a between 1 to 2 BTVL in the near future, very easily, which is insane.
10 years from now, will every minute of your day somehow involve a blockchain transaction?
It's going to be crazy. We are evolving, and this for me is the natural state of future economy. I want to keep building that future and continue to revolutionize DeFi. I believe this year is the year. It's going to be a massive year for crypto.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is João Simões, the business leader, crypto pioneer, and blockchain expert. You are the co-founder and CEO of Genesis LRT, an innovative liquid restaking protocol using the exciting new Eigenlayer technology. You have spent the last decade working in private equity, fintech, and you founded Bitmasters, Portugal's first Bitcoin mining firm. You are a professor on the global MBA program at Deakin University in Australia, teaching corporate finance while also advising on Web3 startups. Your aim is to lead a blockchain technology revolution, and you think that Genesis LRT will be at the forefront of this movement, changing the world of finance forever. You believe that Eigenlayer's restaking solution offers a groundbreaking approach that will enhance security, yield, and trust on the Ethereum network. João, welcome to London Real.
Thank you so much for being here. Thank you so much. So I think that you did an amazing intro. I have nothing to add, you know.
Perfect, man. Well, look, I just want to start by saying that Genesis LRT is one of our portfolio companies here at London Real Ventures, which is the world's first media-powered investment firm. Our mission is to transform the world by investing in cutting-edge Web3 and AI companies while giving our partners like you marketing exposure across the London Real media platforms and academies. We heighten awareness, create customers, and build communities by leveraging our global audience and extensive network. João, we're super excited to be part of this journey with you, man. So let's jump in, and maybe we start simple here.
Right.
What is restaking? And maybe to go on that journey, maybe we even have to back up and say, what is staking?
Right.
But maybe we start and maybe explain it to people who might be newish to this ecosystem. So how do you do that?
Yes. So that is actually, there is a very simple way to explain this. So staking is actually, taking a little bit of backing up. So first, in the traditional finance world, which is already a field that is being developed for hundreds, thousands of years, right? Versus crypto that exists for 10 plus years. There is so much things in DeFi and crypto that need to be built, need to be made, right? So we in DeFi, we are looking at traditional finance and other instruments and thinking like, what can we do to enhance and to make a better products, financial products, because DeFi is finance. So we are building financial products. So, and if you see in DeFi, there was nothing that resembled, for example, a mortgage. And that's exactly what is staking in a very simplistic terms. So with a mortgage, you have your house, you stake your house, you put it there, right? And in exchange, you receive liquidity, right? That's the same thing as liquid staking. So you stake your ETH, and in exchange, you receive liquidity, a liquid token. So that's the same thing. And restaking is the concept of double mortgage, which exists in the US. In Europe, I believe it's illegal, but in the US, it's a very common practice. So you are staking your house twice and getting double the liquidity. And with restaking, it's the same thing. You are staking your ETH twice and getting double getting the liquidity on top of that. And how do you get the yield also on top of that? Very simple. So your house will act like a savings account. So when you are putting your money in a savings account, you lock in your dollars or euros, and you are receiving a yield by staking your euros or dollars. And as liquid restaking is exactly the same thing. When you stake, you are saving your ETH on a savings account, and because of that, you are receiving yield on top of that. So in a nutshell, that's it. You are staking your house or staking your ETH, getting yield and getting a liquid token on top of that as liquidity. So in a very simplistic terms, in just like, 5 minutes, this is restaking.
Okay, now let's just talk quickly about Ethereum staking. So in, blockchain and crypto assets, we have something we kind of call the blue chips of crypto.
Right,
and that's usually considered Bitcoin,
or ETH,
which has a market cap of about 1.3 trillion, and ETH, which is about just under half a trillion right now.
Right.
Those are by far the biggest assets, the ones with the greatest history,
Correct.
The biggest user base.
Right.
Now, Bitcoin is really kind of digital gold. It has its own network. It's really decentralized, and it's still on proof of work. Mm-hmm. But Ethereum recently moved to proof of stake about a year ago. And by doing so, people that owned chunks of Ethereum, I think it was 32 Ethereum, would actually get you a node where you could verify transactions. They started getting yields on Ethereum. And this was something that makes it very different than Bitcoin. And you could get, I think, about a 4%, annual yield for just taking your Ethereum and saying, guess what? I'm going to put it aside for a period of time. Someone's going to take that and approve transactions with it. Right. And this asset is now going to give me a 4% yield, which was really interesting.
Yes.
And again, it starts to look more kind of like a bond or a fixed income.
Yes. It's very similar to a bond. So each validator right now, the yield is about 4% per validator. And jumping on Eigenlayer, I know that we will jump on Eigenlayer eventually, but already starting this topic. So what Eigenlayer does, and that's why everyone is so excited about it, is that when you restake the second layer, Eigenlayer is actually built that your second layer, you can have multiple validators inside. So when you stake on the second layer, it goes to Eigenpod, which is the second validator aggregator of validators. And inside you can have multiple validators. So your second stake actually is divided in multiple stakes. And if each validator has the 4%, as we have now as a market standard, this means that you stake once, get 4, you go to Eigenlayer, and inside the Eigenpod, let's say that you stake on 2 or 3 validators. This means that you can have 4 plus 4 plus 4. Then you are hitting that sweet spot that everyone is excited about, meaning that Lido staking or Rocket Pool staking, which is the first layer, is no longer attractive. Why should I get 4 when I can get my ETH on a second layer that will divide on multiple validators and that can get me 12, 18% yields? Amazing. I want that. Everyone wants that.
And this is the headline that gets everyone sitting up in their seats, because 4% annually is not a bad return. Although these days, compared with the Treasury curve, it's not exciting. It used to be more exciting. If rates drop this year, which we think it will, it'll look better. But it doesn't resonate as much as 8% or 12% or 16%. Now, I just had Jordan Belfort on my show. He's the Wolf of Wall Street.
Yes.
He just wrote a book about finance that's actually really good. And I got to know Jordan pretty well. And his whole theory in this book is that the way to make money with Wall Street is to put your money in, say, an S&P fund and allow it to compound. That only gets, that's just one way. That only gets interesting if you're making a 9 or a 10% return. If you can't get those kind of returns, that money won't go to millions over your lifetime. But if you do, it's one of the best strategies for the average person. Yes. Now, enter what you guys are doing. You guys can start getting people 10, 12, maybe 16% yields. All of a sudden, because of a compounding effect, this can really create wealth for people over time.
100%.
And this gets people's attention.
Yes.
And so it's new technology. Again, Eigenlayer really kicked this off. It's a much anticipated protocol. Yes. But right now, you guys are taking something that was 4% and potentially leveraging up, although tell me if that's the right word to use, to where you can get 12%.
Yes.
Now, I went to the MIT Sloan School of Business. You know, you took courses in finance, and they always have a risk-reward diagram. With more reward, typically comes more risk. So what's the catch?
Yeah, so the catch here, and this is something that I have been also discussing personally with the Eigenlayer team, is really the slashing risk. So slashing is when there is like a bad actor or a hacking in a validated transaction, and you get slashed and you lose like the 32 ETH that you have in the validator. In this case, you lose the staking portion that you have.
Okay. And that can happen?
That can happen if you get hacked.
Right.
Or if there is some kind of error during the transaction, or if there is a bad actor. They call it the bad actors.
Right. So if you approve a bad transaction, then they take your ETH away and say, don't do that. Right.
The interesting part here is that because you have multiple validators and you can only get slashed per validator, meaning that even if during imagine that you are staking 5 validators, right? So the first one plus 4 from Eigen. If you get slashed in validator like Eigen 1, you still have 3 transactions that go through. So you still, instead of getting like the 16% yield, get 12, for example, and you get slashed in 1. But what we are doing is we are working on what we think that is a groundbreaking solution, is we are applying insurance against slashing. So we are developing that, and we are also developing something that called DVT technology. So we are applying that to Genesis. So DVT is called distributed validator technology, where in the first layer of stake, we have clusters of multiple validators that keep your keys private and that go around it and makes it to go secure, 100% secure. So you are never validating in the same one. Like it is distributed, the validation keys. So it makes it extra secure. Genesis is the only protocol with this at the moment. So we are working with all the top tier validators like Everstake, Kiln, Staking. We have Everstake, Finland, and like all the tier ones, we have them there. Like I can give you the full list, like it's all about security, right? And bringing back the question to Eigenlayer, I had a conversation myself with Shiram, the creator of Eigen, and what he told me is that he believes that because Eigen is so leveraged up, only the protocols that have insurance or some kind of prevention mechanism to avoid slashing will survive. Because he knows that the slashing can occur. And now let's take it to a more extreme case. So if you are slashed, for example, in validator 1, and you get slashed in validator 2 or 3 at the same time, this means that your slashing compound effect can go up. And this is where the danger comes in. So at the early days of Eigen, and I talk about this during my talk in Istanbul, you theoretically, if you read the Eigenlayer paper, theoretically you can go up to 200% slashing. And then you open the question like, where, if your money is 100%, how can you slash 200? Where's the other 100? Is a void. Who pays that? Yeah. And I asked that directly to the Eigen team, and apparently what they are trying to do is inside the Eigenpod, the risk is divided, meaning that if you have 2 validators, it's 50-50 slashing, not 100-100, which makes way more sense. But if you apply on top of that the insurance, and if you get slashed in 1, but you get insurance of 50%, or if you get insured in 25%, then the customer is happy, we are happy, everyone is happy. So I believe that's really the future of Eigen, is that of course you are leveraging up a lot, but at the same time you are ensuring people that their capital is safe. And if there is a slashing event, you only lose, so to speak, like 5 or 10% of your reward, which is if you are getting 16 or 18%, sometimes losing 5%, it's nothing, right?
Okay. Now, when I was in Dubai for January and February, that's all people were talking about was Eigenlayer, Eigenlayer, Eigenlayer.
Yeah.
Some people had invested. They were up like 20x. It was like the next big thing. When will it be up and running? I'm curious.
Yeah, great question.
And is your technology fully dependent on them, or will you be able to use your technology with other providers in the future?
Yeah, great question. Two-part question.
Yeah.
Responding to the first part. So Eigenlayer right now, they will divide their mainnet launch in 3 parts. So it will be mainnet V1, V2, and V3. Mainnet 1 will be actually in about 40 days. So it's almost there. We are already preparing our team to launch it with them. So everything is aligned already. I was with Shiram also here in East Denver, and he confirmed me in person, like 40 days.
Okay.
40 days, it's live. So V1. Then the V2 will be end of Q2, then V3 end of Q3. So that's the goal. And the differences will be that the V1 will open Eigenlayer to the protocols. So you can already start getting yields, start getting some rewards. V2 enhances like the AVSs, the validators, all that. And V3, I think it will apply like the slashing mechanisms and all that. Like it will be fully released by Q3.
Okay.
You know?
Okay.
So yeah.
So that's when the rollout. The second question, I guess, was, are there going to be competitors to Eigenlayer coming up?
Yes.
And maybe when you answer that, maybe tell me why is Eigenlayer so special? But answer that first.
Yeah. So there is currently, to my knowledge, only one other competitor of Eigenlayer. I don't remember the name. I'm sorry, but I know that there is one team trying to build something similar, but it's still very early on. I believe that is a great question, and a lot of people are asking that question right now in the space. Is like, why Eigen is so special?
Yeah, why so special? Because every other DeFi protocol,
they have like 1,000 companies doing the same thing,
really easy, and we saw that happen over the last 3 years.
I think that I think they are building something so clean. The team is so good that I guess everyone is going with it. I believe, but I do agree that eventually there will be competitors. Okay. Eventually, you will have probably in 1 or 2 or 3 years, probably a world where you will have Eigenlayer and the Eigenlayer 2, Eigenlayer 3, Eigenlayer 4. And we as Genesis, our second layer of staking can go to Eigen, to the other, to the other, to the other. For example, we can integrate because we are doing it with Eigen because they are doing the technology, but we are not fully dependent on them. If there is another company doing a similar strategy with more security or with better yields or whatever it is with the better infrastructure, we can switch the other one during our second staking. Why not?
Okay.
But they were the ones that came up with the restaking narrative. So I guess that's why everyone is so excited about, right?
Okay.
Yeah.
So in January, I attended the Satoshi Roundtable, which is this very hush-hush grouping of about 500 of super crypto OGs. We took over the whole Waldorf Astoria Hotel on the Palm. We weren't allowed to disclose where we were, no videos, no social media. And it was these, discussions, these roundtables that these events would just come up. If you had an idea, you'd stick it on a card and then people would show up and speak really frankly because it was all off the record. Now, one of the topics is Eigenlayer the next 2008 financial crisis? Right. And so I went to that one just to check it out. We hadn't invested in you guys yet, but I'm keeping my ear out. And people were saying, okay, what are we thinking? We've already seen Terra Luna, which was paying 18%
right.
as a stable coin, algorithmic stable coin crash. We went through 08. A lot of people believe that, we know that Satoshi kind of wrote the Bitcoin white paper in response to the financial crisis.
Yes.
And so the big question I'm sure you get is, are we setting ourselves for another over-leveraged situation where it could end in tears for the crypto market with Eigenlayer? What are your thoughts?
Yeah. So the thing is, if there is like a catastrophic event where you get multiple slashing across multiple validators at the same time, and you get that black void of the 200% slashing or something crazy like that, it could crash. Like that's the reality, like it could crash. But what I see, and I think that the Eigenlayer team knows that very well. And like the Shiram is a Berkeley guy, MIT guy, the team is really good. And I think that's why they are delaying the product so much. Because the product was supposed to be released like last year, then they delayed to Q1, and now it's like end of Q1, early Q2, because they know that they need to release something so bulletproof that needs to be the best of the best. And even myself, sometimes I get mad about that and was like, why Eigen is so slow? Why are they taking so much time? And then when I talk with like investors and advisors, they say like, well, I actually prefer to be slower than to rush it and we have a catastrophic event. And then I'm like, they are right. You know, so I guess that all the LRTs and all the projects are really respecting Eigenlayer's time because they know that they need to release something so bulletproof that nothing bad can happen. And if there is some slashing events, maybe it's like 5 or 10%, but never above that, you know, because like the leverage here is so huge. Like there is so much money put into Eigen, like billions and billions of dollars already, that if this goes bust, like it's bad.
Okay. And it already has money locked into Eigenlayer. Yeah. How do you lock money in if it's not live yet?
You can, I think it's all about investing. Maybe majority is investment.
Okay. Or buying like nodes or something.
Yeah. Majority is investment.
Now, big question is the founder of Ethereum, or one of the main founders, Vitalik Buterin, what does he think about restaking? And I think he maybe changed his mind. When it first came out, I think he was a bit suspicious about it. But recently, it seems like he's changed his mind.
Yes.
What's he saying? And I think you might have either talked directly or indirectly to him about this.
So Vitalik in the beginning, he was like very, very anti-Eigenlayer because he saw what could happen to Ethereum. And he foreseen that and he said like, wait a minute, no, this is so much leverage that if something happens, Ethereum goes bust. His own creation is destroyed. So he was heavily against it. But after a while, he started seeing that, wait a minute, if we have more Ethereum staked, this means that there is more security on ETH and there is actually more people involved in Ethereum. So maybe we are bringing Ethereum to the top one. Maybe Bitcoin is not the top one anymore. Ethereum is slowly taking the first spot. And then I think when he understood that by not locking your assets once, but locking in twice, and enhancing the security of Ethereum even more, and making it more secure, more trustworthy, and to have more people putting more money into ETH, I think it changed his mind at that moment. So I was with Vitalik during the Istanbul event at the Staking Summit and Dev Connect and Binance Blockchain Week. He was there during that week, and I had the pleasure to speak with him, and this was the thoughts, you know. So what he said is he's slowly shifting his mind because he understands that, well, if we are bringing more Ethereum to the ecosystem, if we are making it more secure, he's okay with that. But he's still worried about the leveraging part, of course.
Right.
Yeah.
Which makes sense. But also, the more decentralized it is, the more staking makes it a more robust network.
Correct.
And the Bitcoiners always criticize and say, we have the most decentralized network. And they point fingers at Ethereum, and then they point more fingers at Solana. And they say, look, you know, most of these nodes are controlled by a small amount of people. And they always say, you're not decentralized, we are. Mm-hmm. So we know that's a criticism. It's part of the trilemma. And so the fact that Vitalik wants to do this makes sense.
Yeah.
Which maybe brings me to my next point. And this is an interesting point. We've now seen the approval of the Bitcoin ETF.
Yes.
We've seen BlackRock dumping sometimes $1 billion into the Bitcoin ETF when we're only mining sometimes a 10th or a 14th of that amount. Right. We've seen Bitcoin price go up, in reference to that. Mm-hmm. The big question now is the Ethereum ETF. Now, the date, May 23rd, is in everyone's mind because I think it's maybe the earliest they could approve it. But if this gets approved, you and I both used to work in finance. I spent 15 years in fixed income derivatives. I worked on Wall Street. I worked in Chicago. I worked here in London. And I know institutions love a yield-bearing instrument.
Yes.
Now, Bitcoin is not that instrument. Mm-hmm. It's digital gold. It's a diversified asset, perfect for any portfolio, and they are aping into it like nobody's business, as they should. And they're just getting started. Yep. Sovereign wealth funds aren't in there. As Kathy Wood from Mark Invest says, the wirehouses aren't in there. The Merrill Lynch, Bank of America's, Morgan Stanley, they're not even in yet.
Yeah.
But when these institutions smell a yield-bearing instrument and a yield curve, let alone smell a high interest-bearing instrument, I think they're going to go absolutely bonkers for this asset. What are your thoughts on that?
So I had the pleasure to speak with the Franklin Templeton team, that is one of the teams behind the Ethereum ETF, and they are actually building the Ethereum ETF. And I spoke and I asked this question directly to one of their team members, like, is the Ethereum ETF happening? Yes or no? Answer is yes. Answer is yes. It's happening this year, and it's confirmed. So when I saw that and when I got that information, I was literally immediately in my chats with my team saying, like, guys, put all your money into ETH. It's going to be crazy.
Wow.
Like, I believe this year is the year. Like, it's going to be a massive year for crypto. Because, again, all these things that we have been just talking in this couple of minutes is like, Ethereum could surpass Bitcoin with Eigenlayer, with now the ETF. And, like, what's next? Solana ETF? Maybe, you know? And I think that the fact that now corporate is looking at crypto, and especially big banks, and all these traditional finance guys that were always doubtful of crypto are now looking into crypto and say, like, well, maybe this is better than my bonds that are not performing, than my portfolio that is performing 1% a year or two. And we in crypto, we are like in Dubai living our best lives, right? Getting the sweet yields of 10, 15%, even in stables. Look at stables. They are giving yields of 10 plus. If you put your money on USDT, USDC, you are good. If you put some good money on USDT or USDC, you can retire. And that is crazy.
Yeah.
And if you put that in a mix with a portfolio of restaking, with a mix of some Ethereum ETF, moon.
And so you're saying it's happening, is what you're saying.
It's happening.
And again, I think I was listening to Anthony Scaramucci of Skybridge Capital, who's actually here later this afternoon, who said once they approve an ETF with a proof of stake instrument, then the floodgates open.
Yeah.
Because from there to get to a Solana or a Cardano or a Polygon,
it's one step.
It's so close.
Yeah, it's so close.
It's hard to argue against it at that point.
Yes.
Now, the big question is Ethereum a security? And that's the big question. Now, Gary Gensler, our good friend over at the SEC, he taught a class at the MIT Sloan School of Management. It was after I graduated. I was there in like the 90s. And I took that class because it was free on YouTube. It's 24 hours long. I listened to it back in 21. And I learned, first of all, Gary is really smart. He understands crypto really well. And he said in that course that Ethereum was not a security. He said on that course. It's on YouTube. Now he gets into the SEC. And he's become a political figure. And now he seems to be echoing whatever the party tells him. And he says now it's not. And he's digging his heels in, him and his good buddy Elizabeth Warren, and trying to stop it from happening. So the question is can he stop the Ethereum ETF? Now, he tried to stop the Bitcoin ETF, and he couldn't. Larry Fink said this is happening. And Scaramucci knew it was happening even a week or two before, because I believe there was so much money at stake that they railroaded it through.
So much money. Like even yesterday, I was with one of our advisors that works for one of the major investment banks, and he just told me, like, we don't invest anything below like $1 billion. So, like, if it's not something to actually go all in, we don't care. So I think that the ETF thing is one of the best, if not the best thing for crypto in the last few years, and because the big banks love it. The retail loves it, you know, like the BlackRocks, the Goldmans, the JP Morgans, whatever. They are like, well, this is a safe way to put 1 or 2 Bs to create a good diversified portfolio for our clients. And the thing is, the client is king. If the client asks if you ask your hedge fund manager or your investment banking manager, whatever, like, oh, I want this % of yield on my account and I can have this amount of money to put in, they need to build your portfolio. So it's the client that is already calling BlackRock and Goldman and saying, like, guys, I want crypto in my portfolio, you know? That's it.
Yeah. I always explain to my students that, you know, what does a banker want most? First of all, he cares about one thing more than anything, more than his children, more than his life, and that's his bonus. Okay? So I worked at Wall Street. Every year it's about the bonus, and it's like, and everybody prepares for the bonus and talks about the bonus. And the other thing he cares about is servicing his clients. And this is where people don't understand.
Yes.
If your client wants to buy something and you won't sell it to them,
they will go to another bank.
Exactly.
They will go to another
They'll go down
manager.
the street until they find someone that does sell it to them. And so people think, no, bankers don't want to sell them crypto because they can see crypto ending the banking system. No, banks and bankers don't think that far ahead. They literally think to the next bonus pool cycle. If your client wants it, you better give it to them or they're going to go find it down the street by someone else. And so you're right. There's people expressing demand, not to mention, I mean, it's an uncorrelated asset. There's not a lot of those that pop around every now and then. Most of them are taken. And, you know, a lot of
people... And it's new, it's exotic, it's hot, it gives a lot of yields. Like, what do you want more? You know, like it's...
Yeah. And so that's come in now. And you're telling me from your sources that the Ethereum ETF is happening.
Yes.
If that happens on May 23rd.
I don't know the date. The date. Like it could be delayed, you know.
But if that happens this year.
Yeah, this year for sure.
It's going to take what already looks like a monster crypto rally and turn it into a tsunami rally to where we don't even know what happens after that. It's almost like a singularity point where you can't determine the future because a lot of people look at this bull cycle and they look at the last 3 bull cycles and they say it's going to end in April next year and da-da-da. But if you have not only a Bitcoin ETF, but an Ethereum ETF on top of that, it's really hard to predict that future, I would say.
Too.
All right. So you got a big smile on your face. You're happy to be in the right place at the right time.
Yes, sir.
You have said to me you are one of 10 companies that are building a liquid restaking protocol and building on Eigenlayer. What does that feel like to be a tiny number of companies that's servicing what could be tens or hundreds of billions of dollars of money?
So that is a great question, and thank you for that. So when I was doing our fundraising for Genesis, one thing that I always used to say to our soon-to-be investors is, look outside of your window. How many coffee shops or how many hairdressers do you see in just your street? 5, 10? Okay, multiply that by the number of streets in your city, then in your country, then in the world. You are talking about maybe millions of coffee shops and hairdressers and whatever you want to put all these small mom and pop shops, right? Now, looking at restaking, there is only 10 companies in the world doing what we do. There is 8 billion people in the world. It's not a no-brainer, you know? Like you have sectors that have millions and millions and millions of companies and still are making money versus a sector that has 10 companies and Eigen currently has already like filled in maybe 20 billion, something like that. So all these Bs are going to be spread out throughout the 10 LRTs. So this means that Genesis specifically has the possibility of having a between 1 to 2 BTVL in the near future very easily, which is insane.
Wow. And what's to stop more people from getting into this?
I think it's the complexity of the creation of all the logarithmic functions and all the programming part. Because luckily, our CTO is an ex-Anchor guy and he's the guy that actually was behind the liquid staking solution at Anchor. So he already knew how to program liquid staking. So to do liquid restaking was just easy for my CTO. So I believe that the majority of people looking at restaking, they're like, wait a minute, too complex. They need to go back and learn staking. And to learn staking will take it like 6 months plus. Then you need to learn restaking plus 6 months. So I believe that right now, there are probably developers watching this interview at this moment and thinking like, damn, I'm 1 year late.
Right.
Because if you start now learning staking and then you want to learn restaking, it will take you maybe a year. So when you start your project in a year or 2, the market already is gone.
Right. Let alone have a bunch of developers in the field, have them understand it to be able to build a project together. You can't just whip that together.
No.
You can't right click and copy that.
No.
Right.
No.
Reminds me of that movie, Oppenheimer just came out. And it talked about the atomic bomb.
Mm-hmm.
And it talks about, the Americans and they're trying to build it versus the Germans. And you got all of that intelligence at Alamos Labs that allowed them to produce that thing. If you don't have that.
Yes.
Or if you made one wrong assumption, like I think the Germans had made one wrong assumption about they were using heavy water.
I remember at the movie when they asked him like, can we destroy the world? And he said, well, there is a near zero possibility. Like near zero? Yes, it's not zero, it's near zero. In physics, it's always near. The zero is absolute. There is no zero in physics.
Right.
It's always near. And they looked at him like, so are you sure? Yeah. And then they do it and you're like, okay.
Is that what you guys talk about at Genesis? You're like,
yeah.
What's the chance that Genesis, blows up the world? You're like, it's near zero.
It's near zero. It's near zero.
But there's also a point in the movie where they say, what are the Germans doing? They're like, they're using heavy water. And they're like, they're not going to do it. They're on the wrong way. And so there's a barrier to entry, and that's understanding these complex, super complex financial instruments, not to mention the technology to make it happen.
Correct.
Okay.
Correct.
So you feel like you're way ahead of the curve.
Yes.
You're feeling good. You just overfunded this round.
Correct.
And for you right now, it's just about execution.
Yes. Currently, right now, what we want is really to get the best partnerships, and we are working very hard on it right now. Grow TVL and do the integration with Eigen in 40 days and move,
So I should, in 40 some days, be able to go onto Genesis and do some restaking and maybe earn some double-digit yield on my ETH.
Yes.
Woo.
Yes.
Okay.
Sir. Yes, sir.
That's big news.
Yes, sir.
I want to ask you about some of this financial technology because when I first got into DeFi back in 2021, I looked at the space and I was like, wow, there are some amazing innovations happening in DeFi that don't have a traditional finance equivalent.
Right.
And that's what really got my eyes opened. And I remember I first saw the DeFi summer of 2020, where we saw companies like Aave and Compound just explode in TVL. I used to have Andreas Antonopoulos on my show back in 2015, 2017, 2019. He sat in that chair and he would tell me about the Internet of Money and all these concepts. This is before stablecoins had even come out.
Wow.
And he was predicting that all these things were going to happen. And then in 2020, they happened. And everyone was like, wow, this is happening. And not only could you get yield on your crypto, but you could get tokens in the protocol as well.
Yes.
And I remember looking at this because when I was on Wall Street, I would have brokers and I would do like interest rate swaps between my company, Bankers Trust, and say Goldman Sachs or JP Morgan. And the brokers were these firms that would call me up and say, hey, I got a price here. Do you want to do a trade with Goldman? And they kept it anonymous until we did the trade. And if I did a lot of business with my broker, they would get me front row seats at the Knicks game.
Of course.
And they would take me to Sparks Steakhouse.
Of course.
With the big wine glasses where the mob boss was shot out in front before.
Of course.
And that was the way they would reward me. But when I saw DeFi Summer, I thought these guys, instead of rewarding you with the steak dinners, they actually give you kind of shares in the company and tokens of the company.
Yes.
And I thought, wow, DeFi is innovating where Wall Street can't.
Yeah.
And Eigenlayer looks like a similar thing because Wall Street is great, but it really is stuck kind of in the 1930s. It doesn't really have a lot of innovative solutions. Okay, it created credit derivatives and it created credit default swaps and it did some interesting things. Yeah. But because of the way it works and the institutions and the balance sheets, it can't create something like a DeFi protocol.
Like we can move so fast in DeFi. We can, and I think and even I was talking yesterday with one of my advisors that works in this big bank, and we were saying like the amount of synthetics that we can build is infinite. Like you just need to think about what you want, how you want to do it, how you want to wrap it up. DeFi the next day, you just need the good programmers, the good blockchain engineers. It's done. No need to wait for SEC's approvals and whatever, no, it's next day is done.
Yeah. And so people that don't understand what Wall Street's really good at in the past is customizing risk. So say back in the day, I wanted a yield on my portfolio. Well, back in the 40s and 50s, you didn't have many options. You could buy some government bonds, maybe some corporate bonds. But what if you wanted a 20-year maturity or a 30-year maturity or a certain rate? It couldn't help you. Later, we created these things called interest rate swaps. I ran that book in the 90s for Bankers Trust, and I could customize any rate you wanted, any maturity date you wanted, exactly what you want. Then later they said, okay, I want some exposure to mortgages so I can get some extra yield. Gotcha, we can cover you there. I want some exposure to corporate credits. Got you. But then they kind of topped out. What's beautiful about DeFi is people can come in and say, guess what? I want this specific exposure. I want staked ETH exposure, leveraged up, but I want to get insurance from Genesis that gives me some slashing risk. I don't want the whole thing covered, but I'm willing to pay 3% to get 25% of my slashing risk. That's the risk I'm comfortable. And you're like, we got it. I can create that instrument in a couple of hours. And that's what the market needs. Right? Customize risk and then customize reward. And that is a real use case scenario. That's not just cowboys over leveraging. That's actually a real use case scenario.
It's real. And there are real people like getting a lot of money into this. And actually, in crypto, we have a problem that, like it's a good problem, that I just realized that we have like last year, which is, so I've been in the crypto space for a long time. And now that I'm doing Genesis, and like this was after Bitmasters, after my exit and all that. And in Genesis, I was literally like calling all my former partners, like, hey guys, you want to invest? Hey guys, the answer is like, I'm retired. All the guys from like 5-6 years ago are all retired. So you have to chase new people. You have to chase new VCs, new investors, because there is a cycle of like, let's say 4, maybe 5 years where everyone gets so much money, everyone retires, then you have new companies. Then everyone retires, then you have new company. And this doesn't happen in old school VC or banking. No, bankers just go and go and go and go. And you have bankers that were working for like 30 years, 40 years, VCs that are working. Maybe they already have $1 billion fortunes, but they continue, right? But the crypto mentality is somewhat different. People get, I don't know, 10 million plus or something, and they're like, buying a house in Thailand, retire, they don't care anymore. Then you're calling, you want to do another project? No.
Right.
So and that is so weird.
Yeah, and that's a nuance of the crypto market.
It's a nuance, right. Because everyone gets so much money so fast that the contacts that you are building now in 5 years are useless.
Okay.
The majority of everyone already retired.
So it makes it even harder to build new businesses. And even though we had a crash after the last bull run, people still locked away wealth.
Yeah, 100%.
Talk to me about this bull run. Okay, this thing kind of came out of nowhere. We all were knowing or hoping that it was going to come at some point. But I mean, if you look at the prices in December or even in January, I mean, they were 50% less, 60% less. I pulled up a Solana graph last night for my students. It's up 800% in 1 year.
Like you cannot have that in traditional markets.
I was rubbing my eyes, and it's the 4th largest protocol. It's not like some meme coin or some penny stock. You know, it's worth, $80 billion.
Right.
And I was like, what the heck is going on here?
Right.
Talk to me about this bull run. You've been around. What does this bull run feel like to you? We've obviously had the Bitcoin ETF approved, but then not much happened after that.
I feel that this bull run could be like the biggest of all time, and the thing is like, I try to see this as a more conservative eyes, but even with a conservative eye, it's impossible to ignore. BTC ETF, Ethereum ETF, Eigenlayer with billions and billions of dollars, the halving. Then you have something that I also know that you like to discuss a lot, which is politics. You have to look at politics, right? How is the politics in the US? How is the war in Europe, war in Israel? Like the world is crazy right now. And if you look at the world, if you look at the state of the economy, if you look at the investor sentiment, so this is something very, very interesting. So I did my master thesis in how comparing the investor sentiment versus the crypto markets. And what I discovered via doing several mathematical calculations is that the investor correlation versus the crypto markets is actually that the majority of the traditional investors, they don't feel the market as it's a traditional one. It's a completely different. So the investors that invest in crypto are non-traditional investors. And because of that, it's so much more volatile. That's why you have the biggest yields. And of course, this is changing a bit now with the ETFs and the big banks coming in. But it's interesting that the crypto market fits a different crowd. The misfits, right? The people that don't like the system. And the people that don't like the system nowadays, it's a lot of people. It's not 1 or 2. It's in the millions, in the billions, because everyone is tired of what we have, right? Everyone is tired. And even like you see, like, I don't know your opinion about like Trump. Trump is going to win. I believe so, And the thing is, you can like Trump or dislike Trump, but look at the state of the American politics. You have no good candidates. The only person that I guess, is doing something is Trump. So he needs to win, I guess. He's the only good candidate. You don't want to have Joe Biden falling in during a conference. It's embarrassing. The biggest power in the world is tripping and falling and sleeping during a conference. Come on.
Is Trump good for crypto, you think?
I think so, because at least it will slow down the rage from the market, I would say.
Yeah.
So yeah, maybe yes. The wars, like if wars keep happening, people will continue to lose money on their fiat and will continue
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.